Welcome back to another UK property update video, where today's video is going to run through the following with you all. Firstly, we're going to speak about house prices, including the most affordable places to buy and also the least affordable places. Then we're going to look at the rent prices before we then move over to the cost of materials that will impact us all as investors. And finally, we're going to move on to whether you should be buying right now. But before I begin, I just want to say a huge thank you to every single person who has subscribed and supported this channel. As I only sat down recently, I reflected upon how much this channel has grown, and that is all thanks to you guys. So thank you so much from the bottom of my heart. And now with that out of the way, let's get this video going. So let's begin with house prices. So you must have been living under a rock if you haven't noticed the prices of houses recently. It was almost like we were expecting some sort of slowdown and recession, and then boom, the pandemic hits and all of a sudden the house prices have gone through the roof. And they don't seem like they're stopping. Well, that's at least from the outside perspective. But if we delve into the stats, which I'm going to do for you guys now, we can see things are now starting to change ever so slightly. So with that, let's jump into some figures. Where the Evening Standard reports a house price jump of 7.6% year on year, showing a lag in prices within London. Now, despite London still seeing a 2.5% year on year growth, which is still quite a lot given the prices of houses in London anyway, we can put these increases in prices down to people opting to try and beat the stamp duty deadlines. But what was interesting, and although I suppose kind of expected, was that areas outside of London, such as the North or even Wales, led the way in terms of growth, showing a higher demand for people opting for more space, or as people like to say, getting more house for their money. Now, if you're scratching your head and thinking, well, where's the most affordable place, especially in today's current market? Then luckily for you, I'm going to tell you that right now. And what I'm going to do is just put this image here by the Express, which will show you some insight into the areas and the average house prices and also the average salaries as well. Now, of course, on the flip side, we then have the least affordable places, where it's evident in all circumstances the difference between your salary and the average cost of a house is making life extremely difficult for the average person to purchase their home. And I know we're in a nation who loves the idea of owning their own home, so I can understand the dissatisfaction. So while I leave these images here just for a few moments for you to digest, let's move on to something that is worth noting. We are actually slowing down in pace in terms of the housing market. So yes, compared to last year, we've already gone through this 7.6% rise, but in terms of the grand scheme of things, if you take a step back, we're actually going slower than we have gone in the last 4 months. And the inevitable thing I've spoken about on many videos, many times on this channel, is that we are now starting to see signs of a slowdown. And I guess it was kind of inevitable, right? At least from my perspective, that with the average house price hitting crazy prices, there would have to be some sort of slowdown. And many reports from Really Moving, Rightmove and Zoopla have suggested the upcoming autumn months will see a further slowdown in the house market activity. But this again, in my opinion, is more down to the sustainability factor and affordability and the supply and demand issues we've had for many years. Rightmove reported a shortfall of 225,000 houses coming to the market recently, meaning that even people wanting to move simply can't move because the supply just isn't there. Next up, we have rent prices. Now, this is something that, well, has recently been a trending topic. It's the prices of rents, and sadly, they're going up. The average rental value in the UK has now hit over £1,000 for the first time, hitting £1,029 per calendar month, which is a staggering 6.6% more than the last year. I feel like a news reporter reading that. And London on the other side has also seen a 2.1% increase, hitting £1,645 as the average. Now, if that isn't bad enough, we also have another problem, especially for the renting nation, and I suppose for those of you who own homes too. We are seeing energy prices go through the roof as well. And obviously that, coupled in with the cost of living just generally, things are getting tough because millions of Brits now are being forced to pay the highest energy bills in a decade as the cap has now been lifted. Ofgem have given suppliers the green light to raise prices by up to £153 a year, so the cost of living is becoming increasingly harder and harder. So please factor this in when you're looking to potentially maybe stretch yourself in buying a house that maybe kind of exceeds your maximum budget. Next up, we have cost of materials. Now, as a property investor and developer, the last thing I want to hear is the cost of materials rising. But hey, here we are. They're going through the roof. Now, due to a shortage of materials, standard economic principles kick in and prices rise. And then you add in COVID-19, Brexit, and just a huge demand for the housing, it's driven the prices up of essential materials in the UK, making the construction industry that much tougher to profit in and of course operate in. Now this is causing work to slow down, projects to hit a standstill, and many opportunities from an investor's perspective not seeming that profitable. With further rises just mentioned a few days ago, as surveyors are now predicting building materials to rise by 10% over the next year, it's really something that's going to affect us all moving forward. So we need to factor it in because it's simply crazy. Timber has gone up by 120%. Lead times have increased for just standard materials like your plywood from 2 days to 2 weeks. And it just seems to be a huge collection of problems piling upon one another. And this is a problem for us all, not just for investors like myself. It affects our bottom line, obviously as investors, but also the cost will be thrown back to the consumer too on the back end of a transaction. So if you're buying a new build, you're going to feel this too. And finally, let's move on to whether or not you should be investing in today's market or holding out, which I guess is probably the most common question for many of you awesome subscribers. I still stand by what I said on the last video and the video before and the video before. So it might just be worth watching this if you haven't already. So please factor in extra costs of materials when doing your numbers. Please have a contingency for time due to the lead time of getting those materials and sourcing those, and please know your numbers. Opportunities, yes, they're still in today's market, but it is about as tough as I've seen in the last 10 years. And I know location and strategies have an impact on how tough your investing journey will be, but I just want you to all be cautious and not get stung by things you haven't looked at. That would really suck hearing that. So little things you can do is just have your contractors ready, have your main source of materials available, budgeted of course as well, before you even start the project, especially if you're using investors or you're using a bridging loan, because you don't want that hanging over your head and costing you more money. Remember, time is money. So please guys, please be cautious. And with that, my good friends, I would like to just say thank you for sticking around when you guys could have been doing anything and you chose to spend a few minutes with me on today's video. I hope you found this useful and I look forward to seeing you guys again in a few days. Have an awesome day, guys.